We expand this discussion now with Investec Treasury economist Tertia Jacobs. Thank you so much for your time, Tertia. First of all, what do you make of what we know now in terms of the forecast that exists with the inflation targeting regime of a lowered 3%?
Yes, thank you very much. So the key dynamic here is that the Reserve Bank has now revised its inflation forecast lower. The alternative forecast of 3% has now become the baseline forecast. And that basically shows that they anticipate that inflation could move to 3% in the second half of 2025. But as it was pointed out, it's the key driver here is inflation expectations.
What does it mean for an ordinary South African, especially when it comes to the ease as well as the flex at which the Reserve Bank will then dispense monetary policy within the lines of the needs of the South African economic participant?
You know, the governor in his statement said that, various research models have shown that when inflation is round about 3%, it removes the focus in the decision-making process. It takes inflation out of it. So it's a neutral decision. There's other dynamics focusing on. That's the first point. We also know that, households with salaries fixed to inflation don't benefit in a high inflation environment. So lower inflation backdrop is certainly supportive of real incomes, and that's what we could see playing out. So there's more positives to inflation over the medium and longer term than a high inflation rate. The dynamic also is that that the exchange rate should depreciate by less, because if inflation is very high, it means that the rand has to fall by inflation differentials every year to keep the exporters their proceeds competitive. So there's many benefits attached to a lower inflation targeting regime.
What's also interesting around the dynamics that you've outlined is the pending U.S. Tariffs and essentially the uncertainty that this brings with global economic elements. How then does South Africa look towards changing gears with inflation targeting, but also meeting global standards where monetary policy is concerned, while dealing with the tricky part of the U.S. tariffs?
There's quite a few facets in your question. So, the way that we look at US global tariffs and the impact on the global economy is more of a supply side shock. So we don't see it at the moment as inflationary. More of that inflation is likely to be felt in America, because there the price effect will be passed on to consumers. In countries such as China, which is already exporting deflation, the impact of inflation will be much less. What we have also seen is that the dollar has actually depreciated since February, although it has stabilized in July because of US policy uncertainty. So that has also resulted in exchange rates such as the rand appreciating, and that's also supportive of a lower inflation regime. But if I might just add here, in terms of the potential growth challenges to South Africa emanating from the US tariffs, we need, the focus on South Africa should also be how to accelerate growth. Our auto industry, the agricultural sectors will be hit hard, because now we have to find alternative markets from the US. There's going to be fierce competition between all the countries looking for new export markets. So the focus here should be, what can we do to accelerate growth in South Africa? Because as you've seen in the Reserve Bank's GDP growth forecast, it has been revised lower. So we need to prop up our domestic economy, and it comes back to the infrastructure reforms that need to accelerate, among other things.
I wanted us to go exactly there. South Africa's growth prospects, especially in the near term, that revision from 1.2 to 1% currently. Is this even achievable?
I think the risks to the forecast is probably balance at this point in time. You know, we've come a long way from this time last year. We were thinking that we could perhaps grow as much as 2%. You know, so the downward revision basically came from a moderation in fixed investment because some of the reforms in South Africa is taking longer to materialize. Although we must flag there are now, you know, positive dynamics playing at Transnet. And then, of course, the external environment has really become more challenging in terms of what we've discussed. There could be a decline in world trade. There's a risk that trade is getting fragmented. There's new trading blocks taking place. So I think, you know, the ball is very much in South Africa's court, what we can do to revive it. So we do think there will be a mild cyclical upswing. I mean, the reduction in interest rates is certainly positive for households. It will help to reduce costs to companies as well, but it's a very mild upswing. We still need to deal with many of the logistical bottlenecks, get more stuff out of South Africa through the freights and the ports, among other challenges. And then, of course, the water issue also features very high on the to-do list.
As a parting shot, you speak of those reforms that are required in South Africa, but what becomes even more scary in terms of the near-term shock that is expected given the U.S. Tariff regime? What are we likely to face? Because we've been in limbo since the postponement of these tariffs, and we sit on the eve of the 1st of August. Overnight, anything could happen.
You know, when you look at the tariffs that have been announced on India, it was 25%, and President Trump flagged there was also a penalty because of their close relationship with Russia. So we have to wait and see for tomorrow. South Africa has put its propositions in place. We haven't heard anything yet, although we don't have any insight about what's happening behind the scenes. So I guess we just watching the news headlines coming in, and perhaps we will know by tomorrow morning.
Unpredictable, and it's that uncertainty that has global economic dynamics nervous all the time. Thank you so much for your contribution. Tertia Jacobs is a Treasury economist at Investec, talking to us in reaction to the latest monetary policy decision. That's where the South African Reserve Bank has cut the repo rate by 25 basis points to 7%.